What's going on, everybody? Welcome back to another video. Hope you're doing well, feeling great, and enjoying freedom. It's a great day to have a great day. Today, I wanted to talk about 3 different types of income. Not the only 3 types, but I really wanted to focus on these 3 particular types of income, and I will be using McDonald's just as a simple example. We're going to get into it, but really quick, just in case you're new, make sure to subscribe for daily videos. Subscribe to my second channel for weekly videos. Get yourself some DYDSS merchandise to help support the channel. Remember, we got the limited edition DYDSS Christmas line, only available until December 25th. Portion of the proceeds are going to St. Jude Children's Research Hospital. Try out some G Fuel Energy Formula, $5 off your first order by clicking the link in the description. And of course, last but certainly not least, make sure to go and get your up to 12 free fractional shares by downloading Webull and funding your account. Refer 1 friend. Normally it's 3. This month it's only 1 friend, and they're going to give you all the way up to 20 free shares of Google, guaranteed at least 1. For every friend you refer after that, you're going to get 15 free fractional shares. And by the way, each share of Google is worth about $100 right now. 15 free fractional shares per referral. And for every friend you refer, you're going to get an entry for the New Year prize board, where they're going to be picking random people and giving them even more shares of Google. Everything will be linked in the description. Okay, so today I wanted to talk about 3 different types of income, and I will be using McDonald's just simply as an example. You can take away McDonald's and replace it with a different company. It really doesn't matter. I'm just going to be using McDonald's for the sake of this particular video. So let's not worry too much and get too hung up on McDonald's specifically. That's not what we're lasering in on here. I wanted to talk about 3 different types of income. The first type of income, and I will make this very, very quick, because it's pretty self-explanatory, and I'm pretty sure each and every one of us knows what it is. Active income. Going to work, clocking out, killing your shift, clocking out, and going home. Getting paid for your time. Not necessarily getting paid for your products, your services, your experience. Exactly. As an employee, you're getting paid for your time. And when you apply for a job, doesn't matter what the job is. It could be McDonald's, it could be Burger King for all I care. It could be the biggest company in the world, it could be a small business, whatever the case may be, you're getting paid for your time. You're not working, you are selling your time. If you're getting paid $20 an hour, congratulations, you just traded an hour of your life away for a $20 bill. Now, you might be making $10 an hour, you might be making $100 an hour. Either way, you are trading away your time for currency. That is what active income is. And unfortunately, when it comes to active income, it's only income when you're active. Go figure. If you stop clocking in, if one day you say, hey, you know what, I don't feel like going to work today, I don't feel like working at McDonald's today, I'm gonna stay home. Unfortunately, you're not selling your time that day, therefore your income will go down. That's what active income is. You gotta be clocking in, you gotta be clocking out. You gotta get yourself a job, and your boss, your manager, your supervisor, the company will tell you how much an hour of your time or how much a year of your life is worth to them, and that's what you make. That's active income. And you can do this by filling out a job application for McDonald's. The second type of income I wanted to talk about is more on the business side. And you're gonna need a lot of capital. You're gonna need a lot of principal for this. If you want to purchase a McDonald's franchise. Now, this is not something that I could ever see myself doing. This isn't something that I would really want to do. Number one, it's gonna take a pretty hefty amount of dollar bills. You're gonna have to trade a whole lot of hours away to save up for this. But if you wanna purchase a McDonald's franchise or any company that lets you do that and become a franchise owner, number one, you're probably going to need close to, or at the very least, $1 million just to get started. All of the miscellaneous costs that come along with being a franchise owner, it's a pretty expensive process. And it's going to take 3 to 5 years to even get a clue on whether or not your initial $1 million investment was worth it. It's gonna take years before you even get the slightest hint of whether or not you're gonna end up profitable. High risk, high reward. And also, high level of dollar bills needed to be invested on day one, $1 million and multiple years down the road just to roll the dice. Like I said, high risk, high reward, but many of us don't have $1 million. But what if you did? What if you did have $1 million? But you said to yourself, I could buy a McDonald's franchise and be a franchise owner for McDonald's. McDonald's, it's not just, some fast food restaurant. It's actually a real estate empire disguised as a fast food restaurant. McDonald's has far more revenue streams than you probably realize. Anytime you see a McDonald's restaurant anywhere, and you're gonna see them every 5 minutes if you're driving down the highway, you're gonna see McDonald's all over the place. Guess what? McDonald's, the company, owns the land, owns the property that the building is sitting on top of. Not to mention, they are massively, massively, massively profitable. They don't have razor-thin margins. McDonald's makes a lot of money. They have a lot of cash flow. So McDonald's is doing really, really well. But, all that being said, maybe you don't want to be a franchise owner, but you still have $1 million. Or even, let's just say, $10,000 or less. Maybe you have $5. And you say to yourself, I could become a McDonald's franchise owner, but that seems incredibly hands-on. That seems like it would probably run up far more than 40 hours a week, just simply to be the owner. High risk, high reward. A lot of money going in, but also a lot of time going in. I'm trying to free up my time, not sell more of it away or let a lot of it go to waste. What if you take that same $1 million and you invest it in McDonald's stock? This is the other type of income I wanted to talk about, and it's kind of two different types of income blended together. The first one would be capital appreciation. As time goes by, you'll see those capital gains as McDonald's continues taking over the world that is already taken over, continues to build, continues to open up new restaurants in new locations and come out with new products, new services, and just get bigger and bigger and bigger. McDonald's stock is likely to continue on the rise, as it's been since the very beginning. Now, McDonald's, old company, it's going to be a very slow burn. It's not a growth stock by any means, but as they continue to grow and expand and build and innovate, capital gains, your initial $1 million investment is more than likely going to go up. But that's not even the type of income I really wanted to focus on here. I wanted to talk about dividend income. Now, I don't have the exact numbers off the top of my head, but I do happen to know that McDonald's stock right now is trading for about somewhat kind of sort of roughly $250. Just for the sake of simple math, let's call it $250 per share. And let's just say it's yielding about 2%. The dividend yield is about 2%, give or take. So $250 a share, let's just say hypothetically you have $1 million. Your $1 million can buy you 4,000 shares of McDonald's stock today, just about. And with a 2% dividend yield, not only is your $1 million still sitting there, your $1 million worth of McDonald's stock, or should I say 4,000 shares, you're still going to have those. Whether the price goes up or down in the short term, you still have 4,000 shares of McDonald's. And with that 2% dividend yield, not only are you going to more than likely see capital appreciation, but you should see about $20,000 a year in passive dividend income. Now, I'm using $1 million just because I wanted to piggyback off of franchise ownership. Many of us don't have $1 million. I don't have $1 million sitting around. I'm not even worth $1 million. I'm worth nowhere near $1 million. And many of the people watching this can probably say the same. But what's a little bit more of a realistic number many of us can work with? Let's just say, I don't know, $10,000. It could be $10,000 that you have sitting in a bank account somewhere ready to invest, or it could be $10,000 that you are willing to save up for over a prolonged period of time, however long it would take you to save up $10,000. Let's just say $10,000 instead of $1 million. The price of a McDonald's share remains the same, $250, but if you have $10,000 to work with, instead of buying 4,000 shares, you can buy 40 shares of McDonald's stock. Might not seem like very much, but guess what? It's a start. Again, this video isn't about McDonald's or McDonald's franchises or McDonald's stock. I'm just using McDonald's, the name, the brand, the company, as an example to paint a picture. You can swap out McDonald's with any other company or any other franchise or any other stock. This is just an example. 40 shares of McDonald's right now would pay you about $200 per year, and they pay their dividend quarterly, aka every 3 months, which means you'd be getting a cash payment of $50 every 3 months off of that $10,000 investment. And again, the 40 shares that you purchase with your $10,000, you still have those 40 shares. Likely to go up in value. Likely to go up in value by a lot if you're in it for the long term. If you're in it for the short term, that $250 per share could go down to $243 a share. Oh no, I'm losing money on paper. Guess what? You still have the same number of shares, and you're still getting that passive dividend income. So coming around full circle now, there are many different types of income. Many, many, many. Ones that I didn't even include in this video. But the three I wanted to focus on today: active income, income you would make from a business or business ownership or franchise ownership, high risk, high reward, and then of course, passive income, dividend income, with a little bit of capital gains sprinkled on top, I guess you can say. And guess what? The funny thing is, the hilarious thing is, you can do all three. Now, of course, the second one that I mentioned, probably not in the cards for many of us, at least not today. You'd have to make a lot of money first just to get your foot in the door of franchise ownership. But the point I wanted to get across is that you can work a regular job. You can clock in, clock out 40, 50 hours a week, whatever it is that you do for a living. That's active income. You can run a business on the side. You don't have to buy $1 million McDonald's franchise. You can start your own business, or you can buy into a much more affordable franchise if that's what you want to do. There's a lot of different things you can do when it comes to business ownership. You can start your own little brand. You can build that up. That's what I do multiple times over. I build something up and then I move on to the next thing, and I build something new up. And you can do this for free. It doesn't take $1 million. Again, I just wanted to use McDonald's as an example. So you can clock in, clock out every single day, make that active income. You can have a side hustle or a business, or buy into a franchise and get that business type of income, high risk, high reward. Or you can invest those dollar bills that you're making from your active income and generate some passive income as well. That's kind of what I'm after. That's what I've been after for the last couple of years. I want to build something up for myself and beef up the portfolio to the best of my ability. Again, one last time, I'm not focusing too heavily on McDonald's. I am not recommending McDonald's stock. They're just an example I used for the video. But it's an example of something that you can do on your own. You don't need $1 million. You don't even need $10,000. You don't even need $10. You can throw $5 into McDonald's stock if that's what you want. Get a really small fraction of a share, but you still own that very small fraction of a share. And you can continue buying into it. And you can do this, like I said in the intro, you can do this on Webull. Like I said, it's a stock trading app that I use. And, you know, not for nothing, but you can get up to 12 free fractional shares just for joining. If you refer one friend by the end of the month, you can get all the way up to 20 free shares of Google, each worth about $100. 15 free fractional shares for every friend you refer after that. And for every friend you refer, you're going to get an entry into the New Year prize board. You can get the ball rolling on Webull with $5. And again, it doesn't have to be McDonald's. It could be whatever you choose. Make sure you analyze it properly. You weigh out the pros and the cons. You look at the earnings reports, and you come to a conclusion on what stock or index fund or ETF or whatever it is that you want to buy into. And assuming it's one that pays a dividend, start generating that passive income. And you don't need really anything. to start. You get a couple bucks. You don't even have to buy a whole share. You could buy 1/10 of a share or 1% of a share. It doesn't matter. It might not be very substantial. It might not be very impressive, but guess what? You know what I call it? I call it a start. That's how I started, and that's actually how I continue to do things. Every week, I make a small contribution to my Roth IRA, which is my retirement account, and every single day, I fuel the fire by buying into 2 index funds. Every day, Monday through Friday, as long as the market's open. Every single day. And periodically, throughout the week or throughout the month, if I see an opportunity to buy into something very specific, like a non-index fund, like an individual stock, which I don't really enjoy doing. I enjoy doing it, but I don't want to lean too heavily into a particular company, because anything could happen with management and whatever. That's why I like index funds now. The whole basket of stocks all in one. But if I see an opportunity, I'll buy in. And I do this with index funds for the most part. It doesn't have to be individual stocks. Index funds pay dividends as well and generate that passive income off of my active income. I go to work every day. I worked 93 and a half hours last week. 93 and a half. And I invest what I can, when I can, as often as I can, and I try to make that passive income go up. And like I said, at the end of Q3, one of my goals for Q4 is to increase my annual passive income by at least 10%. Aiming for 15, but the goal is to get to at least 10%. Now, we're not done with Q4 yet, but I'm pretty sure I have long surpassed that. I haven't crunched the numbers just yet, but I will at the end of Q4, which we're closing in on right now. But anyway, coming around full circle, those are 3 types, 3 of many types of income. Just wanted to paint a picture. It's not about McDonald's, it's about the money. I want you guys to head on down to the comments and let me know anything and everything related to today's video topic. What do you do for work? You don't have to tell me how much you make, but just out of curiosity, what field are you in? You a doctor? Are you a teacher? Are you a landscaper? What do you do? And you use any of that active income to start businesses? Maybe you are a franchise owner. If so, how's that been going? And do you invest any of those dollars with the intent to generate some passive income dollars? Head on down to the comments and let me know. If you guys like today's video, please hit that like button, subscribe if you're new, subscribe to my second channel, which is my backup channel for exclusive weekly content. Go and get yourself some DYDSS merchandise to help support the channel in the biggest possible way. Remember, we have the limited edition DYDSS Christmas line, only available until December 25th. Get one while you can. A portion of the proceeds are going to St. Jude Children's Research Hospital. It's the season of giving. Help us raise a little bit of money for charity. Try out some G Fuel energy formula. $5 off your first order by clicking the link in the description. They have buy one, get one free sales going on all throughout the month. So go ahead and buy one, go ahead and get one free, and go ahead and get $5 off on top of that. And then finally, last but certainly not least, make sure to go and get your up to 12 free fractional shares by downloading Webull and funding your account. If you refer 1 friend by the end of the month, normally it's 3, but this month it's only 1 friend, 1 referral. They're going to give you all the way up to 20 free shares of Google. You're guaranteed at least 1, so you're walking away a winner no matter what, but you have the chance of winning all the way up to 20. Please, for the love of God, do not pass up on an opportunity. Each share of Google is worth about $100 right now. And for every friend you refer, they're going to give you 15 free fractional random shares of random companies, but some of the best companies in the world, by the way. Ford, Coca-Cola, Apple, Starbucks, the list goes on. And for every friend you refer, they're going to give you an entry for the New Year prize board. And in January, they're going to pick random people and send them even more shares of Google. Everything will be linked in the description. Once again, I want you guys to head on down to the comments and let me know anything and everything related to today's video topic. When it comes to the 3 particular types of income that I lasered in on in this video, what's your favorite? What is your preferred method of making money? Is it by clocking in and clocking out and trading away your time for dollar bills throughout the week? Is it about starting a business, high risk, high reward? Or is it about investing the dollar bills that you earned elsewhere so that you see some capital appreciation as time goes by, as well as some passive dividend income that comes in whether you are working or not, whether you're clocking in, clocking out, you're still getting paid. Head on down to the comments and let me know anything and everything related to today's video topic. Thank you guys so much for watching. See you tomorrow. Don't you dare stop smiling. Peace.